Good morning. Good morning.
Hey, what's going on, Jared? How you doing?
David, how are you, sir?
You're looking good, man.
Look at you. This is the first time you had to put a shirt on in a few weeks.
No, I've been working at the office. My daughter and wife
Okay.
got COVID, so the Southern
Oh, wow.
District is requiring me to self-quarantine. I have no symptoms. I had it earlier in the year. Um,
Okay.
yeah, they're doing better now, but I'm just trying to respect the Southern Nevada Health District. That's
Yeah,
it.
I had a similar situation. One of my daughters and my wife caught it. My oldest daughter and myself did not. And luckily they made it through fine. And it's funny, my daughter had no symptoms at all, and wife kind of went through it for about 5 or 6 days. And, the worst thing is she couldn't taste her Starbucks.
That's a tough one. Yep.
For her, yeah.
Yeah, you need that Starbucks, that little hit.
We'll give everyone a few more minutes to try to get some folks signed on. I think we're just waiting on Jeremy and Jerry as well.
And I just saw Carissa said Jerry Merritt will not be available today.
Oh, she did? Okay.
Yeah, and wanted to give you a congrats too. I saw James York a few weeks back, and he was speaking so highly of all the success you're having over there and all the help
Oh,
you
thank you.
in the PPP. So I know they're so thrilled to have you.
Man,
Especially when that all went down.
I'm telling you, my wife was not happy. The 6 a.m. the 6 a.m. to 7 p.m. work days and
I get
a
it.
few nights where I was up 24 hours because we had that brief window to get people
Just a
submitted.
minute.
So
Yep.
it was a wild time, and I've never seen anything like it, and God willing, it won't happen again.
We'll see, man. Congress might hopefully make something happen, and I know it'll make us busy, but hopefully it'll help. I guess that's what matters most.
Yeah, and I don't know how much we want to get into detail about it, but there's about 25% of the stimulus package that was offered was actually not utilized.
Yeah,
So there's still quite a bit of stimulus sitting out there. Either people have padded their bank accounts or the funds just didn't get utilized and went
yeah,
back into the program because they closed the program down. So
right.
it's kind of unclear how many people really need help. It seems to be industry specific at this point, especially
Yeah,
with what's going on with some of our small business people. Uh, it's like, the entertainment industry, the catering businesses, they seem to be having a little bit of trouble. So,
yeah, and yeah. Maybe we'll talk about it, or people may inquire further. We was at a Zoom call yesterday. It was actually hosted by the Arizona Bankers Association, but they had Larry Kudlow on. I think one of the national economic advisors to the administration, and that's one thing he talked about. There's excess funds that weren't utilized, but they needed to be appropriated to use just those funds that didn't get even used in that second round. So there's definitely some potential out there.
yeah, yeah. And like I said, it'll be interesting to see if they reopen the program because, that puts the onus back on us. And I don't know if you guys have been dealing with the forgiveness process yet, but it seems like a lot of that, the banks are being punished as well as the customers through the
Yeah,
forgiveness process. So, yeah, it'll be hard to get banks to participate if things don't go well the second round.
exactly. Yeah.
I think I saw Jeremy join. I think we just need him to share his audio and video. And we'll
Okay.
go ahead and get started here.
Good.
Jeremy, good morning, sir.
Good morning.
All right, so we'll go ahead and get started. Thank you, everyone, for joining this session with the Urban Chamber. On behalf of the Urban Chamber, as the board chair and as part of the executive board team, I just want to thank everyone for joining us for this great event. As you can see, the chamber has not slowed down at all. I'm trying to make sure we're getting good content and information out to folks. So thank you once again for being a part of today's event, just making it what it is and doing what we can virtually. This has been an event we've done for the past several years in person. Always been a huge success and always been proud to be a part of it and glad to moderate this panel with our two guests here today, David Navarro, who is with Pacific Premier Bank, and Jeremy McVitie, who's with DreamSpring, which was formerly Axiom. And if you guys each want to just take a couple of seconds or a couple of minutes to introduce yourselves, tell us a little bit about your institution and who you're with. We'll go ahead and start with David there.
Thank you, Jaron, for moderating the panel. Hi, everyone. David Navarro. I am the Director of Commercial Banking over at Pacific Premier Bank. We have a small presence in Las Vegas, but we're a relatively large regional bank. We service small businesses as well as larger privately held companies, so really the full spectrum. And my team and I focus on is really those small businesses and larger private businesses here in the Las Vegas area. I'm a native, born and raised, did all my schooling here, so I participate in a lot of boards. So I am very entrenched with the community, and it means a lot to me. Even that expression, Nevada means home. This is the only home I've known. So I appreciate that we're having a panel like this, especially in such a strange time, and probably the dialogue and the questions that Jaron will ask, which are all very important questions in normal times, are probably amplified times 10 just during COVID. So really excited to get in this with you all and hopefully be a resource during the panel as well as after. Thank you, Jaron.
Thank you. And Jeremy, please. Jeremy, if you can hear us, you're muted.
Yeah, you're on mute, I think.
Up now.
Perfect.
Thank you.
Okay. Thanks, Jaron. And yeah, no, I'd echo the same comments as David as far as the times we're in. So it's just really appreciate the opportunity to be meeting today and moving forward with helping out small businesses. So I am a community lending officer with DreamSpring, and DreamSpring is a 26-year-old nonprofit CDFI, or community development financial institution, similar to in mission to Prestimo's CDFI. You heard from Noe in the session earlier, and traditionally we have focused on microloans. We do only small business lending. We're not like a bank. We don't take deposits or anything like that. And so our mission truly is to get capital into the hands of small business owners and entrepreneurs. So yeah, no, excited to have the conversation today, and thanks everyone for attending.
Yeah, thank you, Jeremy. We appreciate it. I got to piggyback and mess with David a little bit because I got to see David start his banking career, and here he is as a grown man now. So it was interesting to see each person's progression as they move through their careers, and I'm very proud of what David's done and the work he's done over at Pacific Premier, and we've had a couple opportunities to work together throughout our careers. So glad to have you, David. And Jeremy, thank you for what you guys have done with DreamSpring. I know as many of us kind of went through the PPP nightmare of trying to help business owners, you guys did more than your fair share. So definitely appreciate that and glad to have you on the panel as well. And just FYI, as we get started, just be sure before you start speaking to check your mute buttons. I may mute you, David, from time to time because we're getting a little bit of feedback when people are speaking. All right. But we'll go ahead and get started right into the questions. We don't want to hold any punches. We're going to hold you guys a little bit to the fire here. The first question right off the bat is, what is one unique characteristic of a financial product you provide, and how does it help business owners seeking capital? So one unique product, and how does it help our business owners and some of the folks that may be joining us for this virtual meeting? Jeremy, do you want to go ahead and go first?
Sure. No, I'm happy to do that. It's a different time for us right now, and yes, we were definitely involved in the PPP lending, and only opened up our other programs for about the last 2 months, and so we're still feeling out where we can re-enter with lending. So if you were asking me this question a year ago, I would say our Presto loan product, which would be anything from $1,000 to 10, 20, up to 40,000 at the time. Right now, we are not lending at the lower end of the scale. So I would say a $10,000 loan is about the smallest that we could do, depending on the circumstances. But definitely our micro loans are what we're known for, although we can lend up to 2 million for commercial real estate.
And Jeremy, I'll kind of piggyback on your answer there. Would you say at this time that some of your lending has become industry specific? And if so, are there any industries that you are seeing that you favor more over others?
It's a great question. We are, as most of the land, looking at that a lot closer than we may have been before the pandemic. And so anything that puts people close together is something that is less, we're less interested in, or looking at closely what kind of plans you have for social distancing, that sort of thing, keeping people safe. So that would be, and it's especially difficult for us in Nevada being, and Las Vegas specifically, with so many event-based or tourism-based industries. And so I think we have been a little more hesitant in that space, just right now at least, asking more questions. We do a lot of very small businesses, so that could be food trucks, salons. That's more what we're typically looking at.
Thank you. Yeah, I appreciate your honesty. And David, same question for you, I guess, would be what would be a unique characteristic of a financial product you provide, and how is it helping small business owners right now?
Yeah, very, very similar, Jeremy. In the past, we had a specific product that was primarily driven by the owner's credit scores, which was helpful and less reliant on business financial statements. And that product went anywhere from 5,000 all the way up to 250,000. In fact, if it was $50,000 or under, it wouldn't even require financial statements typically, usually just an application. Obviously, fast forward a little bit, we don't have that product back as of yet. I'm hopeful that we re-engage that product soon, but that has not stopped us from lending. So here's what we are doing. What we're doing is we're evaluating each request as we would any conventional request. So there's more questions, there's more financial statements, but there's also some benefits, even though the drawback may be it takes a little longer time and more information needs provided. The advantages of that for the business owner, for you all, may be that you get to negotiate on areas within the terms of the credit that you normally do not, right? When banks offer many of these packaged products, or they offer a specific product that has maybe a trademark associated with it, usually you have to fit in a certain box. And if you fit in that box, then great, everything's fine and dandy, you get accepted, you get approved. But for those scenarios where you have one thing that doesn't fit in the box, but it makes a lot of sense to have a business relationship with you, that's where just the conventional products, conventional underwriting, all that stuff really fits in. And oftentimes we can end up with a far more advantageous arrangement between the bank and the customer. So that's where we're focused on. And one other thing I would highlight about uniqueness with our bank, and particularly here locally in Las Vegas, this has nothing to do with a product, but very much has to do with the team. So the team consists of myself and 3 other colleagues, and we work together as a team with business owners. And our goal, obviously, is not just to be a banker, but really to be a trusted advisor and be a resource for you far beyond just a simple transaction. We want to be one of your go-to calls whenever you're thinking of doing something, whether that's personal or whether that's business related. Ultimately, we want to have that value add for you. And that value add is our expertise and our consistency in getting the job done. And I think that's what makes us unique, aside from just products.
Yeah, I appreciate that answer, David. And, as our Urban Chamber Board Chair, Shondell Newsom always says, it's about real relationships, right? Not just doing transactions for people, but really providing that consultation. I know, Jeremy, with DreamSpring, that's a big thing that you guys have always been involved with is providing that coaching and guidance through the lending process and not looking at it as just a transaction, but really finding a solution that fits. And it's important to have partners like DreamSpring. When people like David and I with our traditional lending products are not able to help a customer, we can refer them over to you. I guess my next question kind of leads in really well. I would say, realistically, could someone come to either one of you and say, I can obtain lending within the next 90 days? And this question is kind of prompted to David's response as well as you, Jeremy. There's a lot of institutions that have either stopped lending for the rest of the year, slowed down lending for the rest of the year. But I think you guys each kind of hit on this a little bit in your answers to the previous question, but just real succinctly, could you say that someone could come to you and obtain financing within the next 90 days? Jeremy, if you want to go ahead and start us off.
Yes, it's realistic. Within 90 days, possibly shorter. I think that's one thing that we've always been able to do is work pretty quickly to get a decision or to get you to another resource. You the information. Here's what it will take in order for you to get a loan and be ready for a loan. And so definitely in 90 days, it's realistic. Kind of what, again, with Noe and the other session, talking about having your financials in order, having your credit in order. Those are super important because we are going to ask for them on some level, what your books look like, and we want to make sure that back and that we're not getting you in a situation where you're taking a loan that then down the line causes more problems than it does help you. So yes.
Exactly. I appreciate it. David.
Yeah, my response would be absolutely. And I can say that pretty confidently because we've been closing deals during the pandemic. And in fact, we recently closed one for a nonprofit who bought their first building. And it's pretty exciting for us to help the nonprofit world when we can. But what I think Jeremy was alluding to earlier is something that's very true for us as well. Because of the uncertainty related to COVID-19 and just how far that impact's going to be in the future and what exactly that impact is, no one truly knows. We all have assumptions or maybe reasons to believe, the future is going to look a certain way based on certain evidence. However, what we've been doing at the bank is really having more thorough conversations, sometimes requesting more information than we typically do. And it's not to make it harder for you all. We are trying to find every possible way to get to a yes. And that's our goal ultimately. So that is the change that has occurred. We're still doing tons of new business. However, it's changed in the scope of information we need to get to that yes. And so when you all are out there looking for credit, be mindful of that. I know for a fact, my bank is not unique in that sense. Any bank that's lending right now, for instance, Jared's bank is probably doing the same thing, having more in-depth conversations, saying, hey, how have you been handling COVID? How are your customers handling COVID? What do you think the long-term impact's gonna be? Has it been positive or has it been negative? So all these things, and if it has been negative, what's your plan going forward to address it? So all these things have now factored into the equation. And that's why it's taking sometimes a little bit longer, but at the end of the day, usually the business owner or the borrower has a lot of control in that process and the timing. This may surprise some people, but a good number of times it is not the bank that is running slow. Sometimes it's the customers maybe forgetting they needed to reply to an email, provide an answer, or provide a certain document to move things along. Because banks sometimes have to sit idle unless they cross all their T's and dot their I's, unfortunately, because of regulation and just how we've been pushed to that limit now. So just be mindful of that. Anything we can do to speed up the process, we want to do. So thank you, Jared.
And David, you hit it right on the head. Pacific Premier is not unique to Valley Bank's process either. Very similar. We're doing the same things. We really have to find out in depth, how are you dealing with COVID? How has COVID impacted you? And even when you apply for an SBA loan, it's one of the top questions they ask even before you submit a new loan to get an authorization is, how have you been impacted by COVID? But what I think it's done is it's made people really think about how their business is going to innovate, how they're going to deal with this going forward and not let it stop their businesses. And like you said, Noe said it on the first panel, it's really important that, hey, congratulations, you've made it through hopefully the peak of this thing. And how are you going to deal with it going forward? Because it may be part of our lives for the foreseeable future. We want to know that you've figured out a way to deal with it and make your business work and be able to repay your loans. And we can give you financing options that'll help you along the way. And then my next question kind of leads right into that. What would you guys say to any customer that came to you? What are 1 to 2 concrete steps starting today that participants could take to be able to obtain financing within the next 90 days? I think each of you touched on it a little bit, but once again, let's make sure to hit it on the head. What are 1 to 2 steps that someone could take within the next 90 days? And David, if you don't mind.
Yeah, no, happy to address that. So probably the most important thing for any traditional bank when evaluating credit requests is the financials and the tax returns, both on the business side as well as the personal. So the better you have your financial statements, right? Meaning, the balance sheet balances, there's no goofy items in there. Like for instance, on the profit and loss, one thing I see all the time is ask my accountant. Sometimes that's not helpful to the bank. If it's a small dollar amount, usually we don't mind it, but if it's a large dollar amount, then it's like, oh, well, that may be important. Let's ask about that. Or if the balance sheet, the assets do not equal the liabilities and equity, that's a problem. Or if your retained earnings, which is within equity, and this might be a little too into the weeds, but if your retained earnings doesn't balance year over year, then we have to address it. We have to figure out what happened. How did these assets or how did this cash leave the company? Did you distribute it as an owner, or what is it all about? Was it an error in accounting? So we need to address that. So have your financials in order. It'll help you. It'll help you, the bank, make the process much quicker. The second thing I would say echoes what I said earlier about expecting questions around COVID-19, particularly how is it impacting you, right? Positively or negatively. If it's positive, is that going to continue? So if you're an online seller, maybe the impact has been positive. But if you think as stores reopen, your sales are going to drop back down or things like that, let the bank know, because it would be terrible to get into a relationship where the bank has their assumptions thinking one way, and then the next year you're showing, oh, my sales decreased 20%. Now the bank is asking me all these questions where you could have addressed it from the very beginning. What's more common is if COVID has impacted you negatively, addressing the plan you have, or maybe you're already executing it to improve the financial situation of your company in the midst of the uncertainty of COVID-19. And if you've already had some success in doing so, maybe providing the backup proof. Here's a great example. So if when COVID and the lockdowns came out, let's say I was a restaurant and I had to shut down my business for a month, right? Maybe that was during the month of April. So my April numbers do not look stellar, right? Nothing's happening. But then, we found a way to socially distance in the restaurant. We worked with Grubhub. We worked with Postmates to be able to provide our food to people that want to order online, pick up, or just get it delivered, right? So as I did that, revenue started to pick up in May, June, July. And so when I talk about providing proof, maybe that's showing the bank, hey, here's my financial statements during the month of April or up to April, but look at what's happening after May, June, July. I've returned to profitability, or that's where I'm trending. So you can prove out what you're telling us. And the more ammunition the bank has to prove out your case, the better it is. Because like I said, we're trying to get to yes. It's probably, and Jaron and Jeremy can probably attest, it's probably the worst feeling for a banker who invests his time or her time and a client that invests their time just to be told no. And that's literally the last thing we want to do. So be ready for those two things, having your financials in order, as well as prepared to answer and address questions and concerns around COVID. That's what I would say.
And Jeremy, David, to kind of wrap up what you said, bring it all home. I think you, with your accounting background, of course, you're going to dig into some things probably sharper than some of us, even other bankers, right? But at the same time, I think it's important that we hit it on the head again. Have your financials in order. Have your financials in order. Something you kind of wrapped up there at the end is I don't want business owners to be upset about a quick no. I think a quick no means a lot more than a slow no or even a slow yes, because there's so much to answer in that process. So I think it's good when you have bankers like yourself that are willing to say, okay, I'm going to give you the hard answer because it's going to get you to where you need to get to faster to try to find the financing you need. And maybe
Jared,
that leads you to a conversation with Jeremy or some other financing option that may be available.
just one quick thing I wanted to mention on the
Yeah.
quick no. So I agree with Jared. Quick no's are very favorable because then it doesn't waste your time or resources, which is by far the most valuable thing a business owner has. But it's perfectly okay. And I think what a banker should do, sometimes they don't, is explain why it doesn't work for their institution and hopefully provide other options, maybe another bank they know is doing it, or an alternative lender, or people like Jeremy. So, and it's perfectly fine to ask your bank, hey, why wouldn't this work? So just wanted to throw that out there before I forgot. Sorry about that.
No, it's a good point because each of us have our niche. We each have our playground that we want to play on, and we have areas where we don't want to go. So definitely, that's a good point to make because every bank's not going to be good at everything, and all of us aren't going to be a jack of all trades. So it's important to know that you're with the right banking partner. And as we talk a lot with the Urban Chamber, it's important to interview your banker just like you would interview a new employee and making sure that it's a good match and a good pairing. And if it's not, let's figure out real quickly where we can get you to. I think Walt was a good resource to have on the first panel with access to capital because he talked a lot about as a business coach how it's important to get you to the right person quickly rather than just drag you along through the process. And then Jeremy, I'll ask the same question to you as well. Within the next 90 days, what are 1 to 2 concrete things a business owner could do to obtain financing from you guys?
Yes, so I think that those are all the things that we are also going to look for. Financials. Don't want to beat that drum too much, but it's true that we are going to ask for that. For loans, we're going to ask for a 2019 tax return if it's available. If it's a new business, which we can fund, we're going to definitely look for that business plan with some financial projections on where you expect your revenues and expenses to be, and not just to have the projections, but to have the backup as to why you think that's going to, how you think that you're going to get there. And the more information, the better, basically. The more information that we have available to understand that, the better. Especially now in a time where even existing businesses that have been around for a long time are needing to change in a structural or really fundamental way because of what's been happening recently. It's almost as if it's a new business, or at least a major change to your business, and understanding how you are taking new opportunities, finding new opportunities is really important for us to understand. We're going to look for a current profit and loss. There's so many businesses, especially the smaller businesses that we tend to work with, who don't necessarily keep their books for themselves, but it's a really good idea because that's giving you information about how your business is performing, and it's something you may want to consider if you're not doing it already, that you keep your books for yourself and follow what your performance has been, and use that to make decisions. So that's what we're going to expect when we decide whether or not we can make a loan to you and feel good about your ability to pay it back. Also, if you have credit issues, I know there's another session, and Alana at Operation Hope is there. There's other folks out there that can help you with credit, but identifying if you have, we're going to look at personal credit on loans. And so as a business owner, take it upon yourself to take care of your personal credit. It's going to only benefit you when you need to get credit for your business. And if there are issues, we're one of the organizations, we exist because sometimes the banks aren't able to make a loan. And so we're there to help underserved business owners. And that can include people with credit issues sometimes. And so we're still going to look at that though, and want to see that you you're using credit responsibly. Things happen. We understand that, but we want to be sure that you're taking care of those things.
I appreciate that, Jeremy. Thank you. And a couple of things that you said I want to make sure we note on as well is, you also mentioned about having your financials in order. But I think the big thing we need to tell business owners and people on this virtual meeting is that your financials should not be a surprise. It shouldn't take one of us to have to come to you and tell you what your financial picture looks like. You should be reviewing those things on a regular basis. And if you have a business plan that say you wrote 6 months ago or whatever, it needs update. It should be a living, breathing document that you're looking at on a regular basis. And if COVID wasn't a reason to pick it up, then I don't know what other reason you need to pick up your business plan and really look at what you're doing going forward. And I'll give a quick example. I have a customer of my own that bottles tequila and liquor for different liquor companies. So guess what? No one's buying alcohol. Alcohol is not a priority. But guess what was? Hand sanitizer. So they flipped their entire business model using the same tequila bottles that they were bottling tequila in and started bottling hand sanitizer and deploying that. And they were able to maintain somewhat because they were able to innovate and kind of keep up with that pace of change. And also, Jeremy, you touched on a little bit with the credit issues. I think that's a good point for each of us to kind of talk about a little bit is that, credit issues are not going to be a hard no, but let's talk about them. We know things happen. People's personal credit is suffering right now and may have suffered in the past, but it's not a definite no. We may be able to find a workaround, but there's got to be a good explanation for it. I know from my end, with our institution, there's got to be an explanation. It can't be just, oh, I forgot, or this happened or that happened. We want to know kind of a little bit of the background. And it goes back to David's point that he made earlier. We're going to dig into credits a lot more these days. That missed payment may mean a lot more to us now than it did last year this time. So things that we need to make sure that people on this call and the folks that we talk to on a regular basis just need to pay attention to. Was there anything to add to that from either of you, or? All right, so we'll go into another question here. I guess another good question to ask as people start to prepare and look at financing options, not only for the rest of this year, but for 2021. What are some of the key risk factors that you look for in a loan? And I'll kind of phrase it this way. A lot of times it's harder to get a loan when you either don't have collateral or you have bad credit, or there's some other factor that's kind of playing on the credit request that might drag it down a little bit. So what are some key lending factors that each of you would look at to try to qualify someone for a loan? And David, if you don't mind.
Yeah, so we ultimately and generally, we evaluate two, right? The business financial strength and then the personal financial strength. With the business financial strength, a couple of things we look at. First is cash flow in relation to debt, right? So when you think of cash flow, think of that net profit. So after you've made revenue, you've paid all your expenses, you have a profit or you have a loss maybe. And the bank will go ahead and add back some non-cash items like depreciation or amortization, as well as interest expense. We don't want to double count it for what we're going to do next. But you're not cutting a check for depreciation every month, right? Oh, I got to pay my depreciation on my truck. No one's doing that. And sometimes, especially for taxes, you get special depreciation allowances when you purchase equipment, which is great for taxes, but bankers recognize, hey, this is not truly an expense. They have an asset that still has value. So we add that back, which helps you, and that helps us determine cash flow. And then we look at that cash flow and assess it against your debt payments of both principal and interest. And we want to make sure that you can pay your debt payments, including any new ones you're trying to get from the bank. And we also don't want you to just be able to pay it. We want you to have a small cushion. And in some cases, maybe even a slightly larger cushion, right? For example, in COVID, because there's uncertainty, we like maybe a 25% cushion over your debt payments. So here's a good example. If your cash flow was, or let me back up. If your annual debt payments, and this is very large, if your annual debt payments were $100,000, the bank would usually look to see that you have at least $125,000 in cash flow, right? So enough to pay the $100,000 as well as a small cushion to pay yourself as an owner, or just to keep in the business in case things get rough in the road ahead. So that's one assessment, cash flow. Another assessment is with your balance sheet. You have assets in your company, and you also have loans that help you get those assets, right? Quick example, sometimes you'll get a loan to buy a truck, a vehicle, a piece of equipment, or a piece of real estate, right? Nothing wrong with that. Then you look at the value of those assets in relation to the liabilities. And what that shows us is your equity. So what percentage you own of all those assets, right? That is equity above the debt. And the more equity you have, the more power you have financially, right? If you need to access credit, if you have a rough road ahead, not only do you have to rely on your business making money, which may be impacted, you have assets that still have value that can be sold, or you can get a loan against it, right? To prepare for that. So that's the second thing with business, and really that's it when it comes to business. Personal side, it's the same exact assessment. We look at your personal cash flow, from all sources, right? If you take distributions, if you take wages from the company, and how you're able to handle your personal debt. And then we also look at your personal financial statement, which is just like a balance sheet. It basically tells us how you manage your lifestyle in a way. And one other thing that we look at with a little more, with a keen eye, is your credit report, which kind of tells us how you handle debt. So you may have a strong personal financial statement, you may make a lot of money, but maybe you haven't had the right strategies with handling your personal debt. And that's something that can impact it pretty significantly. And that's where we see people slip up very frequently. They got a stellar business, or sometimes the business is adequate, right? It makes money. But then the owners sometimes have mismanaged on the personal side, and we have to oftentimes work with them to get it cleaned up, to be in a point where we can reasonably give them some financing. So that's how a bank assesses a loan traditionally, really looking at the business and personal cash flow, as well as the balance sheets of both.
I appreciate it. And Jeremy, I guess same question for you as well. What are some key lending factors that you look at as you go through your process of trying to qualify someone for funding?
I would echo the same things that David touched on as far as the numbers that we're going to look at. The kind of the nuts and bolts of the analysis. We're definitely doing some of that. I guess the difference where we may be is that we're trying to make sure you can pay the loan back. We may have a little bit different criteria. So that's being an alternative lender, a CDFI that is there for people who maybe aren't able to access banking for one reason or another, because they haven't been in business long enough to show that history that banks usually want to see, you guys usually want to see, or whether it's just not quite, credit score isn't quite there, or there's something there that the bank has a particular problem with that maybe we can take a second look. So I would say that it's pretty much the same look. Our dials are a little bit different, if you will. We are also looking at. I just want to comment on, especially, it's always been true in the role that I'm in, and I think you guys would probably say the same. Just being inspired by the clients that we work with, the business owners that we work with, what you guys are able to do with the it's pretty amazing, and I think that going through the this last several months that we have, it's only shown even more. So I just want to make that comment that I'm always inspired by what business owners and entrepreneurs are able to do and able to accomplish with limited resources, really. And so to take that step of talking to your banker if you have an idea, or talking to me or one of the other resource partners that's in this session, doing this with the Capital Connections, that's something that a lot of times business owners don't think to do, because they're just doing what and chasing the vision that they have, which is really impressive. So when you take the time to talk to your banker, talk to another partner, I think that that can be very valuable, and we want to be there for you. Like David has mentioned, we want to say yes, and it's tough when we can't because we can see your vision and want to support that. We just want to do that in a way that gets you to where you want to go without having an unforeseen circumstance set you back, which has been, this time has been and still continues to be very difficult in that regard. So I think that also I want to mention that we're learning from you as well. And so maybe it's no now, but we've only been open again for maybe 2 months. And so if we can't do something now, our criteria is always changing. And as recently as yesterday, if you came to me Monday, I would say, well, our minimum score is 700 for this particular program, and now it's 670. Or this industry, well, we can't look at, but we've reconsidered it and now we can. So we're innovating and trying to adapt as well. So that information that we get by having the opportunity to look at your loan request is helping us and helping us change our process and what we have to offer.
I appreciate that, Jeremy, and I love that comment you made. Like, we're inspired by the business owners that we work with. They're some of the best minds we have out there, and if they can't make it, I don't know what we'll do even as bankers. So I think it behooves all of us that are participating on this panel to make sure that business owners are able to have some sort of success during this time and look forward to a time when things can get back to some kind of normalcy. And I hate to even put it that way, but it seems like that's what we're kind of hoping for, is that they can get back to what they do best. And hopefully the innovation, is taking them out of their comfort zone. They don't have to continue to do, and they can get back to what they do well, and being able to have access to capital is a big part of that. And one of the things I wanted to touch on for each of us, during this time, we talked about a lot, how COVID has impacted people. So that COVID impact mainly has affected cash flow. So when you look at someone's cash flow, they may have, the numbers are down from March or whenever things kind of shut down, March 15th date until now. Are there ways for someone to make their loan request look better, considering that their cash flow may have suffered? And I know we talked about it a lot, about talking about how are you dealing with COVID, but what are some other things outside of just how are they dealing with COVID that might make their deal a little bit stronger when they come to us looking for capital, whether that's collateral, maybe a guarantor or something of that nature? Are those some things that you guys would suggest? And what are some other things you would look at other than just cash flow, knowing they've been impacted by COVID? And David, you can go ahead.
Okay. You hit on a couple of them. And we talked about one earlier about being ready for those types of questions and really being able to dive into your plan, your strategy. And hopefully you've had some time to show that your strategy is working, right, and could possibly provide proof. That's one very helpful way. There's also then some structural areas, which Jaron just alluded to, right? If you are trying to buy a particular asset, maybe you come in with more collateral than you did previously. Or maybe you lower the loan amount for what you're looking for. Those are some obvious fixes. So if you have less cash flow, if you have a lower loan, then those loan payments are going to be less. And even though you've had reduced cash flow, you still may be able to service them. And then in a year or whenever things start to stabilize, you can look at increasing that loan amount at a more appropriate time. Also, one other thing Jaron mentioned was guarantor. Maybe you could guarantee is pretty common with small businesses. It's actually uncommon not to have a guarantee with a small business, but maybe you have a minority partner in the business from a percentage standpoint that you can add to the request, right? Maybe he owns 10 or maybe she owns 15%. So typically a bank would not be thinking about having them as a guarantor, but you may say, hey, my partner is very strong financially on the personal side, and she really is invested in this business and wants it to succeed. We'd like for you to also consider the strength of her personal guarantee with this credit request. And a bank will. And all those factors go to help the bank make the common sense decision. And so, considering those things, that can help strengthen the credit. So three things aside from the COVID stuff we already talked about: potentially more collateral, possibly a lower loan size, and third, possibly additional guarantors. Those are some ways that I envision of getting to a yes.
And Jeremy, same question. What would kind of be some alternative factors you all would look at to make the deal stronger, considering that that business has been impacted by COVID?
Yeah, definitely looking at those kind of things that can strengthen the loan request. So the guarantors sometimes, especially with cash flow or sometimes with credit, would be when we might ask that you find someone else who could co-sign. So if you're in the business is maybe not quite there to support the debt with cash flow. If a spouse, a friend, someone else, business associate would be willing to sign on the loan that has that other income, that getting back to relationships, that's a relationship that you may be able to leverage, and who knows you and your business more intimately than we do, being new to you, that could sign on the loan, and knows that you're going to be able to perform and that they are not going to necessarily need to step in, but that we have that confidence in that if that were necessary, that could happen before, say, you start missing payments or things like that. Collateral is good, but collateral is kind of and sometimes we're going to require that, but I don't think any of us really want to have to consider collateral. That is kind of a last resort, right? I can say for us, one thing that we are doing is definitely trying to use a loan program through the SBA. The Community Advantage Program is what we participate in. That program allows us to do a loan that doesn't quite meet our other loan criteria, and the SBA then guarantees a portion of that loan. And so we're trying to use that in certain circumstances where we just can't quite get comfortable with the loan. It is a little more process and paperwork, but that's definitely allowed us to get more capital out there.
And Jeremy, I'll add to that. SBA is still a very viable option right now. SBA still has a lot of funds available to guarantee loans. And for those that may not be as familiar with the program, you can go to a bank and get a financing, and you may not qualify for conventional financing, but the SBA program would be able to mitigate some of those weaknesses we talked about. You've been impacted by COVID. Maybe you don't have the collateral available, or your credit has suffered in the past. SBA can kind of help to offset some of those weaknesses by providing a guarantee for your loan. In the case of default, we could go to SBA to be made whole as a lender rather than going after you as the borrower. So SBA is still available to people as a great option for lending. And I know me, myself, being, my SBA background, I'm probably going to start my conversation with SBA before I even talk about conventional financing options, because I know that gives us the best start. And if conventional is the best way to go, of course, we'll go that way. But a lot of times SBA fits the customer. And just considering where we are today, SBA is still a very good option. I know our bank and our institution are funding SBA loans actively. And to David's point earlier, we're trying to get deals done still. We haven't kind of taken a knee yet and said we're going to hold up from lending. So we're still active in the lending process and trying to get capital deployed to our small business owners. And I guess, before we kind of go into the questions section, we have several different lenders that are on this call and several different lenders on the panel. I guess from each of you, what is your opinion about a borrower looking for advice from multiple lenders at once, or seeking capital from multiple lenders at once? Is that a good thing or is that a bad thing? Should they try to work with one lender and try to have them direct them, or is it okay to get information from different lenders at the same time? Because we have different representation here on the panel. And Jeremy, I'll go ahead and start with you.
I think that to start, probably the best thing to do is if you have a banker that you have a relationship with, that's a great place to start. We want to see you get the best loan or the best information as you can. So it doesn't hurt to look around. But I would say, yeah, if you have an existing relationship, start there. They will look out for you. Most that I've worked with are going to, if they can't do something, they will try to get you to a resource that they can. It's also can be time consuming. So I think that's the thing that you need to weigh is, am I just spinning my wheels here? Because if it's not a good loan, it's going to probably be pretty hard to get good financing. not that it is all the same, because everyone has their niche, but you know, and if you don't like what you're hearing, or you don't feel like you're getting the service that you want, it doesn't hurt to shop around. Just be mindful if it's worth your time, or if you're just spending time unnecessarily, because it's a lot of work.
It is. David, please.
Yeah, I think working with multiple banks is not a bad thing. I truly believe in the power of competition, because I think as a business owner or a potential borrower, it benefits you tremendously, in the sense that you understand what the value adds of different banks are, and you can make an informed decision working with multiple different quotes or different lenders. And I think that's a very powerful position to be in. And then ultimately you make the best decision amongst those when possible. Give you an example, and one thing that I strongly urge everybody to consider. Most of the borrowers I have worked with have oftentimes pinpointed focus on the interest rate, which is appropriate. Interest rate's a very important factor, right? Monthly payment is, how much interest, all that. There are considerations to factor in aside from just strictly the interest rate. Give you a couple of them. The structure of the loan, right? One bank may be willing to go for a lower interest rate, but then they're going to want your firstborn as collateral, all these different things to qualify for that pricing. That may not really be advantageous to you. Secondly, how does it look after the transaction's done? What's the relationship like? Oh, I hated the guy I worked with. Well, you're going to be stuck with him maybe 10 years, right? With the loan request, if you do real estate, or maybe even longer, right? And you would hate to be in a relationship where you are at odds with someone, or it was adversarial for such a long time. If you have a servicing issue come up, really you want someone that's responsive. You want someone that's going to have your back, who's gone at bat for you. And every bank, even if you work with one, the vast majority of banks I know don't gouge customers. Every bank I've ever seen has given fair deals. There may be someone that offers something slightly cheaper, slightly less harsh from a structural standpoint, but generally banks are pretty close to their offers to clients, independent banks, if they think it's a good deal. So typically most banks you'll work with will give you a fair deal, and then you need to factor in not just the pricing, but also those outside factors, which will allow you to make a meaningful decision on which bank value is going to be the best for you as a business owner. So I'm not opposed to people working with multiple businesses. If you choose to just work with one who you feel comfortable with, that's not usually the worst decision either. They're probably more familiar, can do things a little more quickly. And generally, like I was saying earlier, most banks are offering fair deals across the board, because we know there's competition out there. We would hate for you to find out 2 years in, oh, you guys screwed me over, so we're not friends. That's not an ideal scenario either. So either approach is fine. Competition's powerful.
Yeah. I'm sorry to cut you off there, but I'll also add that from a borrower standpoint or a business owner standpoint, I think there's two things that can come out of competition between banks or working with multiple banks and lenders at the same time. One is there's value in knowing that, hey, my business is valuable enough that banks are competing for my relationship. That's one thing. The other thing is, if we're all coming to the same consensus about where your business is today, whether you are able to obtain capital or access to capital at this time, I think there's power in that as well. When you've got several people giving you the same answer, maybe just phrasing it a little bit differently. But I think those are two powerful things that a business owner can't discount. So there's value in competing, but I like what Jeremy said. It's work to work with multiple banks. It's work to keep all that stuff in order, and it's work to go out and have to start the lending process all over again. As much as you try to keep things organized, you're going to be doing multiple applications. You're doing multiple different forms, and especially when you start talking SBA and forms expiring and having to start things all over again. So there's some pros and cons to that. But I would agree with David and Jeremy as well that I think there's a lot of value in making sure that you have banks competing for your attention and that you're working with multiple lenders. And I'm a big believer in interviewing bankers just like you would interview anyone else. I made that comment earlier, but I'm going to just harp on it. You know, it's important to make sure that you and your banker are a good fit for one another so you don't have those contentious situations like David talked about it. You really feel like you didn't get taken on the deal and you really got a solution that worked for you. And before we go too much further, I'm looking here. I don't see any questions in the chat. Just please be sure for the participants that are watching this panel, if you would like to ask a question, to enter it into the chat box that's on the right-hand side of the screen. We'll give everyone a few minutes to kind of add a few questions before we move too much further and move into the next section. And as folks are doing that, I want to thank Jeremy and David for your time today. Jeremy, once again, thank you for being that alternative lending source and not just another banker. You know, we bankers tend to run in the same circle and see each other on a regular basis and come across each other on deals. So it's nice to know we have a resource partner like you. And David, like I said, it's always good for us as bankers to have a good working relationship with each other because we do each have our niche and there's room for all of us to kind of play in the playground and have our own place in the sandbox. So I've always appreciated our working relationship and been a good friend and, you know, working with you and a colleague throughout the years. So thank you again.
Mutual. Thank you, Jared.
Thank you for the opportunity and nice being here with you guys.
Thank you. And I don't see any questions from the panelists, so I'm going to go ahead and let you guys go. We'll transition into the next step, which will be the networking. So if you are still available, we'll be doing some one-on-one networking. So if you want to go ahead and virtually walk over to the networking booth, we'll go ahead and join the rest of the group, and hopefully we can get some good one-on-one sessions and get some information out. But thank you again to each of you, and I'll see you in the next session.
All right. Thank you, everyone. Take care.